Or I guess we're on the air, on the broadcast. It is Thursday. Gee, I didn't hear the jingle. I didn't hear the music. It is Thursday, January
I didn't either.
29th. We're almost at the end of our first month here in 2026. And we have Robert Marson, Kevin Bakesbaker, Nadine Turman here on Wall Street Beats. And all right, I know we could be talking about tech, but we'll go there later. Uh-oh, I think we lost Robert. So let's come back here. Let's start with Bakes. Bakes, what are you seeing today, or what's on your radar screen?
Yeah, what I'm talking about is copper, and I'm going to start with my my junior miners ETF COPJ.
Okay.
And I know maybe people are sick of metals, but metals. I'm up 29% this month, which has never happened ever, ever,
Yeah.
ever.
So
And
what do you
so
do?
I'm
I asked that. I mean, and are you looking about all the miners? Because I actually started trimming stuff. Yesterday, I was like, I'm tapping out on some of this stuff.
agreed. I sold, and this is my mantra: is when I make 100% in less than a year, I sell half. And so I did that back here. So this 10% position is now five-ish.
Okay.
I bought this in back here in July. Okay, these are junior copper miners. This isn't Freeport McMoran and stuff like
You got
that.
the riskier stuff in your stuff. Yeah.
Yep. Yeah, and they go, oh well, I like small caps. Yeah, I like small cap copper miners, and I like international diversification in copper
Right.
miners. And so
Right.
I kind of, but I don't sit there like a strategist on Wall Street saying, oh, I'm here at 30,000 feet, and thus I'm predicting that this is what's going to outperform. The market is telling me to go here. And so here's what I mean. Look at this wall of buying power over here. I mean,
Okay.
the up volume is just massive, and I want to show. But I guess here's my point. This was with the spot price in the I don't know 4 or 5s per pound. Jen, can you go put up the copper 1 year and 10 year for me, please? Because I hope some members made some okay. So here's July of last year, and then we're at 5, and here we are obliterating 6 right now.
Right.
We're up 9. This is the copper spot price. We're at 623, 630, something like that. I can't keep up because it's going up so fast. It's up 9% today. My point being is that here we were, Wall Street Beats members getting in at spot 5, COPJ a double ago. And I'm going to let my winners run, but I'm up to 13% cash now because every time my 10 percenters, 10% of the portfolio becomes 13, 14, I'm peeling them back. And I've been doing that on a few occasions. Platinum, PLTM, silver, SIL, now copper have all been, I've taken half off the table and I'm letting my winners run. And look at this. This is the 10 year. Of the copper price. I mean, everybody is making money. These are all-time highs. And we can get into
there for a second, because you're talking
Sure.
about sell discipline versus technicals in some way. So how do you determine? So let's say somebody didn't have a 10%, they had a 1%, right? That they started smaller, because it's a lot easier to get heartache when you started big and then you had a big run. But is it the same sell discipline if somebody had a smaller position, or what would you be looking for if they're like, well, 1.3% or whatever doesn't give me heartache, or 1.13 doesn't give me heartache? How do I think about when I get out of my position? So, what would you tell people who maybe didn't start as big as you?
Okay, yeah, and that's astute. That's astute. These are extended, and I don't care if you're a 10% position or a 1% position or a 1.3. So let's not delude ourselves. Commodities move in parabolas when they move. This is a bull cycle. These tend to last years, not months. And so, but I also understand that when when the pullbacks can be sharp and severe. So yes, my 10% positions make me a bit more sensitive than if I was running a Fidelity portfolio and I had 101% positions. I own 10% ETFs. Now, inside of each of those ETFs, there's probably 30 different
Sure.
stocks. So
Right, but at the
so
same time, like
I'm diversified.
Copper Miners, like Junior, is going to give you the same bet. So even if there's some idiosyncrasies within the names, they're going to be run by a lot of the same stuff.
Yeah, and it's I'm not delusional. I mean, I bought these
Yeah,
because of the leverage. So
right.
copper goes from 5 to 6 plus. The it ripples through a relatively stable cost structure at the mining level, and the bottom line explodes. And then the
Right.
multiples explode, and then the fund flows show up because if you're heaven help you, a small or mid cap manager, and someone says, I have to own some metals. Well, here they
There you
are,
go.
but they're all
Right,
going to
yeah.
look like this. And I understand that most people can't buy these charts. They just
Right.
it gives them angst, for lack of a
Right.
better term.
Right.
So
What are you looking
so
for to know when to totally get out of the position? How do you know that?
I do that in a few ways. Frankly, I'm going back and Ben sent me some charts. I'm going through some charts because I want to go to the history and say, when silver went from trough to peak and copper went from trough to peak in prior cycles, this is what happened. And it's going to be different this time, but it's going to rhyme. So I might say something like, this looks so much like 1980 that I'm going to take almost all of it off just for that reason, because I don't have the stair step, support resistance that I would normally see with a tech stock with earnings releases and what have you. The other thing is forced displacement. Yes, I'm a bull in copper, but if shorting the Qs looks like it's the 10th best stock, best ETF, that's going in, and copper's going out if I like it more.
Got
So
it.
between
Okay,
forced
thanks.
displacement and history, and I'm not going to do it perfectly, but I
Yeah.
feel a lot better because now this is pure profit.
Yeah.
Pure profit. So
Right.
it's
But
a
you don't
whole.
but also you don't want to lose that, right? Because it's like, okay, I've made a lot. You never want to be the one who stays too long at the party.
No, and I will. The punch bowl will be in my hands when
Yeah.
the music stops. But I'm gonna be I'm gonna be as close as I possibly can. What I think a lot of investors do is say, well, I've made so much money, or this has gone up so much, and they ignore the market. I watched this in the '90s. AOL was expensive from 93, 4, 5, 6, 7, 8,
Right.
9, and they ripped the shorts faces off. The market will tell you when it's overvalued. More on that later. We're foreshadowing, my third idea today. But that's what I'm doing with copper.
Okay.
Can I
So,
go to uranium?
yeah, go to your next idea. What do we got?
Okay, because I want to move it along because I want to give Robert and you your due. So I'm going to keep up the pace. This is uranium. Okay, this is URNJ, and bought this
Is
back in
there any metal
September.
not working? How about that? Is there any metal that is not
Not
working?
really. Not really. I mean, we need it all. We need it all. So,
Yeah.
and I can lament that, or I can say, well, this is where the fish are biting, and
Yeah.
so I'm going to be casting furiously while it's going on because I know at some point the fish get satiated.
Yeah.
So for now, uranium is frankly, and I've talked about this before. This is my favorite because I think this is about as inevitable as any investment theme I've ever come across because
Okay.
of the long term nature of the aversion to nuclear power, to the absolute necessity and acceptance of nuclear power, and
But you're playing
again,
it through a spicier lens here. I see junior miners.
yeah, because this is I go through 5,300 charts. This is one of the 10 best.
Right.
I keep things really, really
Did you trim
simple.
this too, or are you keeping with it?
This is in the situation. I'm up 57%, And if again, I did this a little bit yesterday where it got to 12, 13, and I peel it back to 10.
Okay.
So I'm going to be doing, and I hope I do that, and I hope I lament every damn sale as this goes up because and this is a good segue. Jen, go to the uranium charts, please. The spot uranium charts. All right. Here's the daily. All right. I don't care what kind of a technician you are. That's a bullish chart. Uranium is going north. We need it yesterday. And not we, the U.S. If you own a nuclear plant in China, India, France, wherever, or you're restarting 3 Mile Island here, you need uranium. And it's going north. And then go look at the 10-year, please, Jen. All right. This is 106 over here, and we're at 90, 91 right now.
Okay.
When you take out 106, you're going to put on another 20, 30 bucks with very little trouble. And there's not a lot of uranium miners out there, and people are going to want to get into this pool, I believe. So, and then you start tackling the 130 all-time highs, and you take those out, and then you have Silver 2, the sequel. And I've been
Okay.
talking about this. I've been talking about this for 5 years, and I've been talking it for since I joined Wall Street Beats. So I'm praying that our members made some money off of this. I really do.
Well, that sounds good. Is that the third? You had
No, third
copper,
is
uranium. Third
all right.
is
Just to show you how eclectic I can be,
okay. You
Nadine.
got Palantir. All right.
All right, Palantir. And the reason I bring this up is that this is the first time in 3 years it closed below the 200 day.
Yeah, it's breaking
Earnings
down a little bit here.
earnings are coming up February 2nd, and I think they're going to have a hard time making everybody happy, including Dan Ives, the bulls of the bulls. So take a look at this. And this is another, lesson that I've learned. Okay, let me go to the weekly. This is going to be better.
Yeah.
So, this is, you want to talk about a polarizing stock on Wall Street. I think Palantir probably has supplanted Tesla for
It's
that.
down over 6% today.
Sorry.
SAP down 19%.
Yeah. So,
Yeah,
here's the break above the 200 day.
we'll talk about
Here's the break above the 200 day 3 years ago. Okay. And it was overvalued here, and it was overvalued so when was that? This is at, let's call it $10. And it was overvalued at 10 and 20 and 40 and 80. And certainly it was overvalued at 200. Now it's overvalued and breaking down.
Yeah.
And I think we're going to
That's an
learn a lot
understatement today.
and it's adding to it today because I think someone looked at my diary and saw that I was going to talk about this today. So now we're going to learn a lot. If February 2nd they blow earnings apart, but people yawn, then I think you can really get excited about pressing this on the short side. There's an outside possibility that they blow it apart and they take out this all-time high at $2. I doubt that happens. I doubt that's happened. So I've got two metal longs and a Palantir AI technology short, and that's what I've got today.
Yeah. Wow. All right. No, I only say it because SAP came up on my screen too. I mean, Palantir's down, but SAP down 19%. That is bad news. You do
Yeah.
not want to be. People are looking at ASML versus SAP, two of the few kind of known tech stocks in Europe, and probably switching gears here. So, all right. So let's go to Robert. Robert, what's on your deck today? What's on your plate?
Well, I will talk about two different things that related to Bakes' commentary and your commentary in the past. One is commodities that haven't run. I'm looking at to figure out how to buy propane because it's at the low end of the range while natural gas exploded, oil is rallying strongly, and propane's sitting on its ass. So if you look up the propane chart, Bakes, you'll see it's very cheap. And I can't imagine with this cold that's descended on 75% of the U.S. that people aren't using a lot of propane these days. So there was an inventory problem there. I would assume it's in the process of being consumed right now as we think about it. Called my broker and asked him, "How do I buy propane? Get me a propane trade. So JP Morgan's gonna call me back. I don't know if I could buy
Hmm.
the commodity or there's an ETF. I doubt it. That's my commodity. It's got a bad chart, but it'll
Okay.
have a good in 6 months.
Okay.
And
Okay.
you asked about a 1% position. What do you do? Well, I mentioned that MRAM would be one of my commentary stocks today. It's Everspin. It's a memory company, which everybody knows memory's hot, but they don't make a commodity memory. They make a specialized design win, memory product that's a lot more expensive than the other products that they compete against. It's a much higher quality, and the IP is beautiful. But
Mhm.
the stock MRAM, I started buying a position at around five and change. I bought it up to seven. I thought I was chasing it because when I did a call with the company, it was closer to four and change, five. Started to run, and I only got a 1.5% position, so it hit 13 to
Okay.
14 this week. I mentioned it on the show, probably over in the fall or in the
Yep.
summer. I probably made 2.5 times sales. Stock doubled. It's not
Wow.
even it's not even 6 months old. But because it was only a 1.5% position, it became a two and a
Mm.
half percent position in the rally. I just sold the whole thing. I, you know,
Okay.
I hate having real companies not, if this were a lottery ticket, a 5 or 10xer in my book, I would have, I might have held it because I had
Yeah.
would have had bigger upside. But I was already paying more than I wanted to, and it was already well through my original price target. So,
Okay.
I just sold 100% of it. I didn't sell
Okay.
the 25 or 50%. So MRAM Everspin is gone from my long portfolio.
All right.
And that's my good chart, Bakesy. My lousy chart is a software. It's called a software company, but it's not really a software company. So I'm trying to catch this falling knife called SimilarWeb. It's an Americanized Israeli company that acquires, processes, and sells data. And I did
Okay.
a post yesterday where storage stocks are ramping, data center stocks are ramping in any aspect of data center build out. But the one company that sells data for a living, other than Facebook and Google, because we all know they sell our data, right? And they make a lot of money selling our data,
Yeah.
right? So these guys,
Yeah.
are the biggest provider of just dedicated data in the world,
Yep.
and the reason I think it's mistaken as a software company. So when you buy Salesforce or Workday or
Yeah.
SAP, you have enterprise software. You have that's a
Yeah.
platform to process data.
Yeah.
Salesforce is a the process. Salesforce doesn't come with data. You take a seat and you have a platform. You need to put the data in, right? It's your own data.
Yeah.
So people are worried about AI being able to recreate the features of Salesforce
Yeah.
without paying Salesforce. And
Right.
Clark did that last year, and I said that on the show. We talked
Yeah.
about this. You wouldn't buy the data, the software stocks, with your money because
Yeah.
if Klarna can obsolete Salesforce and I think Workday was the other one that they
Right.
that they they ripped out by creating their own in 6 or 9 months with AI, I just thought that was a problem. The issue here is that SimilarWeb
Yeah.
sells its data through
Yeah.
software as a service or data as a
Yeah.
service. So there is no data as a service industry because there's only one company that does it. That's them. So they get put into software as a service, but they actually
Okay.
sell inputs to the platform, not the platform. Now, maybe AI could replicate their data. They have three proprietary sources and one public source. I don't exactly know the ratio of the data, where they get it from as a percent, but I asked the company about this, and they said, "Yeah, over 5 years, somebody could probably replicate our data portfolio if they started today." So maybe it could be, but they think they have a head start, and they're using
Okay.
AI to get more data to process it better, to make it more valuable, to make it more relevant and accurate. And they're selling their data now.
Yeah.
They just started selling it to the LLMs. The
Yeah.
biggest customer Their biggest customer is Google. Google's by far their largest customer. So if one asks me, well, is the data worth anything? Is it good enough to pay for? Google's their biggest customer. I think Google pays them over $10 million a year for their data. So these guys have said that not only is the AI a headwind, but they think it could be $1 billion revenue stream for them in the
Okay.
intermediate long term. And they're only a $285 million company. And they also said they think they can get to 100 million. And one analyst said this year the company chafed when I mentioned that, but in a few years, I think it's possible for them to get to $100 million run rate selling AI, selling data to the AI model operators. So that would give them from 300 million this year closer to 400 million from that one business that they don't. It was 1 million last quarter, and they
Okay.
think get it up to 100 million in a couple few years.
Yeah.
So the company, it's five and change today. It's down from 25 a couple of years ago. It's down from 16 last year. Their numbers have not yet been impacted. The sense is that they are going to have a slower growth rate than they thought originally of 15 to 17%. So maybe that comes down to 13 or 14%, but they have 80% gross margins. And in 4 years, if they grow revenue 13% a year, do a couple of small bolt-ons, and hit their margin target for 2029, I believe they'll make $1 a share in earnings. And there's about $1 a share in cash, no debt on the balance sheet. So you're getting $1 in your of cash in your 550,
And
540.
remind people of the ticker here because this is interesting, right?
Similar web, SMWB is the ticker.
There you go.
So I bought some stock in the last couple of days. I paid 255. It's a little cheaper than that. Than five, excuse me, 555. And
Okay.
you see, if I have two examples that I bought in the last year and shared with you, and was a little early. My first buy in Electrovaya was 375. My highest buy was 4. My lowest buy was 220. And I'm selling. I trimmed some at 11, just a very small amount. But because the portfolio management got to be a way too big part of my portfolio. So after more than a triple, I trimmed like about less than 10%, about 10% of my portfolio.
Yeah.
So, and another one was Arteris AIP, which we had a big win on, and it had gone from 16 or 20 down to 4. I bought my first stock at 4, bought my last stock at 250, averaged 340, sold most of it at 13 to 14, 12, 13, $14 a share. And this is 1.3 times EV to sales. And for a company with 80% gross margins, profitable today, cash flow positive today,
It's
with
good.
net cash, even if they grow 10% a year, not 13 or
Yeah.
15 or 17, the stock is stupid cheap. They just had their major competitor called Semrush acquired by Adobe in the fourth quarter. I don't even believe the deal closed yet. I think it's announced, but I haven't seen it close at 3.3 times sales. So this
Wow.
is
Okay.
1.3, and their closest competitor is in the process of being bought at 3 times, nearly 2.5 times the valuation of this company today. So I could be early. I have been early. I bought my first stock at 8 and change. I bought my last stock at 550. I might be buying more at 450 or 350. But because I know the business and I think the numbers are solid, I'm willing to turn this into an Arteris or an Electrovaya opportunity.
All right. Well, these are really interesting names, probably not on people's radars. So, what does someone have to be concerned about, especially if somebody bought a competitor and not them? Like, what was the attractiveness of the competitor versus this company?
Well, the competitor was for sale, and they're not. But that's the only
Got
thing
it.
I heard. I heard this company's technology is a little better. So I think, yeah, the big issue here is can as some smart guy with a very powerful AI model figure out how to recreate all their data, and that's the thing that you have to worry about. It's not going to obsolete their technology platform. They don't offer a software platform. So we're in the world of where data is everything, and these guys accumulate, process, and sell data. It just seems to me that that's pretty obvious, a
Yeah.
valuable asset in today's world. So
Yeah.
again, it's in software as a service category, so it's being sold with Salesforce is getting every software company that's reported
Yeah.
Basin has gotten slaughtered. So people
Yep.
are just running this. Now, here's what I'll say to that. Okay. Yeah, I see the software stocks getting slaughtered.
Yeah.
Okay. And this company doesn't report for 2 weeks. So it's 2 more weeks to get slaughtered in front of the earnings. And maybe they'll get
Right.
slaughtered after the earnings. But
Right.
this is 1.3 times sales. The other software stocks that are getting slaughtered are 5 to 10 times sales. So when they
Yeah.
get to 1.3 times sales, I'll worry about it.
Okay.
I'll think about buying them too. I'll buy Salesforce at
Okay.
1.3 sales.
Nice. So I don't know, Bakes, if you saw, I came in late today with looking
Yep.
at asking for technicals on energy. So I don't know if you could put that up.
XLE, right?
Yeah,
My biggest position.
Yeah.
that's good to know.
Huh. I
Energy.
own XES. All right. This is the thing that these are the things I like. I like all-time highs, or at least this is the weekly. So this is taken out a high 2 years ago, and is doing it on good volume. And frankly, I get commodities have picked up a little bit. I mean, nat gas is in the threes. Oil is 62.34, something like that. I didn't look this morning.
Up $3.
So things.
Oil's up 3.65 maybe.
Yeah, I mean, look
Yeah.
at this. This is really important. This is 2014. Come on, baby. All right. And we're taking out, or at least threatened to close above this is the monthly, the 12-year high. And that's bullish. It's just bullish. I mean, you can make a case this is one huge cup and handle. This is a Luis Yamada base. The bigger the base, the higher in
Whatever that
space.
is. But go ahead.
Luis Yamada
Sounds like a ski run in Europe. But go ahead.
she's the godmother of technical analysis, and Charlie Peabody and I follow her. Anyway, it's bullish, and I say, oh my heavens, what happens if oil is 70? That doesn't sound that far away to me. And I think this is more fund flows than anything else. I don't think the businesses are getting that much better. I just think that people are saying, I've made my money in Palantir and I've got to be market weight in energy now. And so I'm going to pull XLE off the shelf, which is Exxon and Chevron, basically, I think.
But there's a little bit of weather in here too, right? Like there's some people playing the weather patterns. I've seen notes recently about just the demand, obviously AI demand,
Yep.
and when people are thinking about overall where they're not, they were in tech and metals last year, less in energy. It's a small percentage of most benchmarks, so
Right.
there could be some rotation and some weather in there. Um, so I was just wondering when you're looking at this, and serendipitously, I added more XLE to some portfolios yesterday, in addition to some individual names. But when you think about like at what point do you get a little nervous, or do you just keep watching the technicals and saying like, okay, technicals will tell me when I need to get out, or do you have a target there on when you get a little bit more nervous and maybe shave that position because you're not getting the how do you think about it, Biggs?
Yeah, it's to me the breakout point was back here. And anytime you get 5% beyond a breakout point, I sit on my hands. So let's call this $41, and 5% is 43 and change, and we're above that, and we're gapping up, and unfortunately, we're at the lows of the day right now. But that's short term stuff. I don't think it really matters. But this is clearly a positive trend change. Look at the volume picking up on the up days, and it's they're clearly gathering what others are spilling, in my opinion. Now, I'm curious to see what happens in the shoulder months, April,
Right.
May,
Right.
and
When people kind of pull back out. Right.
if it's 40 in Boston versus 14, we'll see how these things go. But I think that's going to be very, very telling. And they haven't reported yet. My suspicion is no CEO has any big reason to crow about their business right now, just politically. I think they're probably going to be fairly dour, but I think that the industry has finally gotten religion, and they're very disciplined, and they're spewing cash. And I think this is going to go. I think if you see a pullback here to 41, you might want to pick up some if you're not full.
Okay.
But that's a long way away, in my opinion.
Okay. All right. Well, thank you. I'm going to close it out here for Wall Street Beats. We've had an interesting day ranging from Palantir to energy to various tech software names to uranium, copper, what else? Silver. So big
Covered
day
again.
today. So thank you, Robert. Thank you, Kevin. I'm Nadine here on Wall Street Beat, powered by Passes for January 29th, 2026. Happy Thursday, everybody. We'll catch you back tomorrow.
Thank you.
Thank you, guys. Thank you, Jen.
Thanks.